Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, January 18th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the chart. Start with the big picture, work our way into the day itself as usual. And so what we have here, if you've been following for the last couple of months, you know that we had an objective at this descending channel top. This is a weekly chart. This goes back to the July high of last year, 256.06 this week. It was in the mid 260s, as I recall, a month ago when we tested it. And following the testing of this channel top, I'd mentioned how you should allow for, in your calculations, in your trading, and even prepare for that as a trade, the upper 170s channel bottom as a 2 to 3, 3 to 5 month downside target. And that could mean merely buying, reaching for a 175 strike, 180 strike out of the money puts that don't expire for at least 6 months. And in fact, it was just a few days ago that we clarified that target. It is now considered an objective over the next 3 to 5 weeks, holding below this combination channel bottom speed line, 225.51 to 226.88. And this area, having settled below it last Friday, set off a 3 to 5 week sell signal to 178.05 and dropping daily. And so, now you could either do it now or you could, wait for a possible upward retracement into the mid 220s. That could happen today. And if so, this area able to contain buying through February. And if we test this area, you might then reach for those out of the money calls because they'll be just a little bit cheaper than they were on Wednesday's settlement. In any event, this is your ceiling of resistance as we move into February trade, 225.51 to 226.88, able to contain buying through February, and below which 194.07, the late October low, remains a 2 to 3 week objective, the 178.05 descending channel bottom, a 3 to 5 week objective. Working downward today, I will mention, of course, 212.18. That was Tuesday's low, and we slipped below it by 17 ticks, 17 cents on Wednesday. So it did essentially contain daily selling pressures, but I still think it's only worth intraday. We could break or open today below 212.18. And with this, the volatility obviously has contracted considerably on Wednesday, but it can reignite. And if we break 212.18 today, I think it probably will. I do think 202.80 not out of the question as a possible intraday target. If we break 212.18, 202.80, the high of the low from last October, able to contain daily selling pressure. So this is a solid day trade level. If we break 212.18 and you go short, then you can buy that back at 202.80. Should you bottom pick 202.80 as we move into Friday and hold it overnight? I would suggest not. I do think this market is inclined to continue south. As I mentioned a moment ago, the 194.07 October low considered a 2 to 3 week objective. And if we close today below 202.80, we probably tomorrow will test 194.07, where yes, we can double bottom for a day, possibly through next week. From there is the possibility, of course, of rounding back up into this climbing zone of resistance that is presently in the mid 220s. But there's nothing to say that we wouldn't violate 194.07 the very day that we tested and close below it the very day we tested. And if we settle below 194.07, we're just another week away, I think, from reaching the lower 170s. So, sorry, the upper 170s objective. You can see 177.25 is a 5/8 Fibonacci based on the January 23 low against the more recent July high. And so it correlates really well right now with this descending channel bottom at 178.05. And so that covers the downside pretty well. Now for the upside, of course, we have 225.51 to 226.88. And it also corresponds, at least today, with a descending channel top over the last several weeks. That is at 225.90. So they're all in the same vicinity that, if tested today, can contain buying not only for the day, not only through next week, but even through February. So it's well suited for day traders, 3 to 5 day swing traders, and 3 to 5 week swing traders, because once again, holding below that zone, holding below the mid 220s, maintains a 3 to 5 week downside objective in the upper 170s and dropping. Now, if we close today above 226.88. I see that as a good January low. We should, within 3 to 5 days or less, rally to 240.244. I do have that as a weekly resistance area. I think it only deserves session containment. I honestly think that if we close back above 226.88, you should prepare for a 1 to 2 week rally back into a descending 256.06 channel top. That'll be in the low 250s before we know it. And so, yes, once again, I'll rephrase that. I'll reemphasize that if we do, in fact, close above 226.88 today, you should anticipate, I'll just call it the low 250s within 1 to 2 weeks. And the low 250s now in the mid 250s and dropping, able to contain buying, not only through February, but also into the second quarter. And once again, below which 177.73 is calling the market. If we were, over the coming weeks, to close above 256.06 by a 1% degree, this week it's 258.62, then we have a long-term buy signal, which would be great. I mean, I love a bull market in any stock, and anybody who owns Tesla, that would be good information, obviously. To close above 256.06, I do think we can anticipate then by the end of the year this rising channel top at 352.43. But until then, 177.73, I think, is drawing this market to it like a magnet. And I say that, I use that analogy a lot because channel dynamics tend to behave that way. And we just came off the top. The bottom is calling, especially in light of the fact that we settled several days ago below the significant zone of support, now resistance, in the 225.51 to 226.88 region. I think I have said it all. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. We put out AMD analysis. That we just put out on Wednesday. And what is the other stock? My memory is Live, LYV, Live Entertainment, large cap entertainment industry, also another stock pick. We did 2 of them on Wednesday. Check them out for free. You can check it out for 5 days. Everything that we produce, the Daily SPY, the Daily Triple Q, everything we put out for no cost whatsoever, and you just might stick around longer than 5 days. That is all I have for Thursday's Tesla Report. You have a great day.